whether to keep rates instead or steady or increase them in a bid to tame inflation, which has been pushed up by the U.S.-Israel war in Iran. U.S. President Donald Trump pushed Wash's predecessor, Jerome Powell, to cut interest rates and made clear he expected Wash to fulfill its demand for cuts. But with inflation running at an above target 3.8% and uncertainty surrounding Trump's deal to end the war with Iran, the Fed's rate-setting committee unanimously decided to keep rates steady. Statement backed by its 12 members, the Federal Open Market Committee, FOMC, said economic activity is expanding at a solid pace despite elevated uncertainty. The first statement Wednesday represented a marked change in the central bank's communication style, one of Wash's key promises for his tenure. Meanwhile, the dollar index hit a new 13-month high, fueled by a firm pledge from new Federal Reserve Chair Kevin Wash to tackle inflation and ensure price stability. But that has prompted traders to assume there will be at least one rate hike this year, and that's compared with a negligible possibility a couple of weeks ago. The shift in tone from the Fed has hit Treasuries hard, while two-year yields are nearly 10 basis points higher than they were this time last week, while benchmark 10-year yields are falling 3 basis points to 4.451%. Well, that reflects investors' pricing in the chances of near-term rate rises, while gaining some confidence that these could prove short-lived given the drop in the oil price. The cash U.S. bonds market was closed Friday for the Juneteenth holiday, with the dollar in the ascendant. The yen stayed on the back foot to trade around 161.3 points, leaving the U.S. currency at its strongest since last July and well beyond the 160 threshold that most see as a trigger for Japanese intervention. The pound was up 0.1% at $1.3 after a 0.7% drop the previous day, as the Bank of England kept interest rates on hold in a 7-2 vote, while Labour Mayor Andy Burnham won an election in the north of England Friday, removing a key obstacle to a leadership challenge against Prime Minister Keir Starmer. And staying in the UK, the economy is taking a 6% hit from the effect of Brexit, according to economist analysis of Internal Bank of England data. The data is about the decisions, views, and financial results of thousands of British companies since the referendum a decade ago. The study, while analyzing lost growth, found that about half the economic hit came from the sheer surprise and uncertainty of the post-referendum period, while the rest was from rising trade barriers after the UK left the customs union and single market in 2021. But some critics say the study does not fully account for the outperformance of the U.S. investment and tech industries or the European energy shock 4 years ago. Recently, the bank's governor, Andrew Bailey, told journalists that as a consequence of Brexit, in his words, I quote, "I think the level of activity and growth in the economy has been lower." And European leaders are holding crucial roundtable discussions on the second day of the European Council summit in Brussels, with negotiations expected to focus heavily on the bloc's 2028-2034 budget framework. The talks mark the start of what is likely to be a tense 6-month battle over spending priorities, with some leaders already voicing strong opposition to the current draft. Meanwhile, in the UK, the Bank of England has kept interest rates unchanged at 3.75%, choosing caution amid uncertainty over inflation and the impact of a new peace agreement between the US and in Iran. Governor Andrew Bailey welcomed the truce, but warned that rising energy costs in recent months could still push inflation higher later in the year. The development reflects a broader global balancing act as European policymakers weigh economic stability against geopolitical shifts, while EU leaders debate future spending priorities. Central banks continue to navigate inflation risks and fragile growth, while the easing of tensions in the Middle East offering some hope for lower energy prices and reduced pressure on households across Europe. Let's head over to India. That's the world's fastest growing major economy, which is increasingly dependent on dole to keep its poorest people out of desperate poverty. Over the past decade, government cash transfers, particularly directed at women and farmers, have emerged as a major welfare tool for poverty eradication in the country. And according to data from Project DEEP, that's an organization that works on cash-based policies across the country, federal and state allocations for such schemes grew more than 20 times from under $2 billion in 2015 to nearly $30 billion. They now constitute just under 1% of India's GDP and over 10% of its social sector spending. And this growth outpaces spending increases on flagship social schemes that guarantee food security and employment. The trend keeps growing and keeps spreading. And the Indian rupee ended largely unchanged against the dollar after a choppy session Friday, as weakness in regional currencies largely offset the unwinding of long dollar positions. But the currency posted its best week in the last 11 on debt inflows. Well, this was also the fourth weekly gain in the last 5 weeks. The rupee climbed to 94.21 early in the session as long dollar positions were unwound, but surrendered the gains later as the dollar strengthened and index rebalancing outflows hit the currency. It ended little changed at 94.32 per dollar for the week, and the rupee rose 0.83%, marking its best performance since week ended April the 3rd. The rupee has been on a rising trend after the Reserve Bank of India announced dollar attracting measures 2 weeks ago. Now, robust foreign inflows into Indian government securities and a slump in oil prices since then have also worked in favor of the local currency. But the one-way move was challenged by a resurgent dollar, an uptick in oil, and renewed U.S. rate hike expectations on Friday. You're watching Global Business Today. After the break, I would have more stories for you across the globe, and of course, we head on to Africa as well. Just stay with us.
At LN 24/7, we bring the news closer to you.
Is failing to protect Christian.
And from Nigeria, we go to Kenya, where President William Ruto.
It was powerful all over the world.
Local and international news every hour, every day.
And the deal was struck.
Here on LN 24/7.
The eyes have it.
Let's look at the key drivers.
LN 24/7, where the story goes, we go.
Your brand deserves to be seen. On Helen 24/7, we put your business in front of a global audience, anytime, anywhere. From product highlights to full brand features, we help you connect with customers who matter, grow your reach, and boost your visibility. Reach millions across TV, digital, and social media platforms. For more information, you can send us an email or contact us via the numbers on your screen. Partner with Helen 24/7 today, where your brand meets opportunity.
This is Global Business Today. Let's head over now to Kenya, where the country has contracted Africa's Trade and Development Bank and Africa Finance Corporation, AFC, to arrange financing for a $1.2 billion expansion of its main airport in Nairobi. The East African nation is aiming to nearly triple Jomo Kenyatta International Airport's annual passenger handling capacity to 22 million, but had to pause the project last year after it cancelled a deal with India's Adani Group in 2024 following the indictment of its founder in the U.S. Kenya's Transport Minister Davis Chirchir said in a statement late on Thursday that the project is intended to be funded through leveraging of airport-based revenue streams. The project is expected to cost a maximum 154.2 billion shillings, that's about $1.19 billion, and construction would take 3 years. Kenya is keen to maintain its position as a travel hub in the region, even as Ethiopia and Rwanda investment bills in new airports to entice airlines and travelers. Well, the bidding process is ongoing. Well, Zambia said it had agreed with U.S. agency Millennium Challenge Corporation to expand the use of a $491 million agriculture grant program. That's to support key critical minerals infrastructure. The farm-to-market grant, signed in 2024, was originally aimed at boosting agricultural development in Africa's #2 copper-producing country. Well, Zambia's finance ministry in a statement said the realignment will support both Zambia's agricultural and critical minerals economy in the Lobito Corridor, a key economic corridor for Zambia. The Lobito Corridor is centered on a rail link between the continent's top copper and cobalt producer, Democratic Republic of Congo, and Angola's Atlantic port of Lobito. The route is seen as strategic for exporting critical minerals to Western markets seeking to counter China's dominance in metals vital for the energy transition. Well, Zambia aims to link its copper belt to the corridor. Lead project developer, the African Finance Corporation, has said it is targeting financial close in the fourth quarter of 2027. And the International Monetary Fund says it had concluded a staff visit to Malawi Thursday, where it held constructive discussions with authorities on the economy and policy priorities, although no deal has been reached on the new lending. The fund, in a statement, said discussions will continue on the package of policies and reforms that could be supported under an extended credit facility arrangement. An IMF staff mission visited Malawi from June the 9th to 18th for talks on a new arrangement which is aimed at helping the country recover from a severe economic crisis characterized by double-digit inflation and crippling foreign currency shortages. The discussions were expected to focus on fiscal discipline, debt sustainability, and foreign exchange management, among other things. Now, Malawi's last IMF program lapsed in May last year because it did not complete a review within 18 months of its approval, meaning it received only an initial disbursement of $35 million. The Southern African nation's economic difficulties include a high debt burden and declining donor funding. Over in Northern Africa, Egypt's Foreign Minister Badri Abdelati Thursday welcomed his British counterpart Viet Cooper in Cairo. That's just a day after the U.S. and Iran signed a major agreement aimed at ending the conflict. The meeting comes amid growing global attention on the impact of the interim deal, which is expected to ease regional tensions, strengthen stability across key international trade routes. Well, according to officials in Washington and Tehran, the agreement will pave the way for the reopening of the Strait of Hormuz, one of the world's most critical oil transit routes. The deal also signals a return to diplomatic talks between the U.S. and Iran over Tehran's nuclear program, marking a significant step towards rebuilding relations between the longtime rivals. Under the agreement, Iran is expected to immediately regain access to freely sell its oil, while the U.S. is expected to lift restrictions on Iranian ports, combined with a temporary toll-free passage through the strait for the next 60 days. The move is expected to lower global fuel prices. Both ministers, that's Egyptian and UK counterparts, discussed wider UK-Egypt cooperation, including trade, migration movement, and regional crisis in Gaza and Sudan. Back in Nigeria, stakeholders in the business and economic sectors called for deliberate reforms and a more competitive corporate environment as key drivers of sustainable growth. Well, that call was made at the 2026 Pearl Awards Corporate Summit held in the commercial hub Lagos, themed Policy Reform and Corporate Competitiveness, Navigating Towards a Sustainable Edge.
Gathered at business leaders, policymakers, and industry experts for the 2026 Pearl Awards Corporate Summit to discuss how policy reforms can strengthen corporate competitiveness and drive sustainable economic growth. For the key stakeholders, sustained policy reforms remain critical to achieve this.
So, can you sustain reforms? Typically, after 2 years of reform, you get reform fatigue. And then you have what you call ideological backsliding. Go everywhere, you find it in Ecuador and other places. So you be careful of reform fatigue. And reform fatigue sets in if there's a big difference between the rich and the poor. If there are intervening factors. Political resistance, obviously, the people who benefit from the whole system will fight back. Economic shocks can come from anywhere. Nobody expected February 27, 28 that something will happen in Iran, and it happened.
The summit examined the impact of government policies on business performance and investment opportunities.
Collaboration is the name of the game. We will believe that this collaboration will make it possible for us to be able to achieve more positive competitive edge, and not only that, national economic growth and development.
A panel session featuring industry stakeholders also explored strategies for innovation, resilience, and long-term sustainability in Nigeria's evolving business environment.
You cannot say the reform has worked as intended if it does not meet the last mile. The last mile is a common denominator in the Nigerian economy, which is the household. That is where you have the consumers, you have the investors, you have the retail, and what have you. And it is in that absolutely between the transition between stabilization and transformation that is said we have crossed the major hurdle, but we now have to do.
One major reform that happened in Nigeria is that pension reform. And for us at the exchange, we will constantly engage the regulator and the participants in that market, because today they constitute what we call the institutional investors in Nigerian market.
From the corporate perspective, reforms are good because they help you bring the best out of who you can be. When things are normal, everybody relaxes. But when there is a new reform, you're put on your toes.
As Nigeria continues to implement economic reforms, it is believed that the right policy framework will be crucial in helping businesses maintain a sustainable edge.
Well, this summit is very important at this critical time. The oil share index of the NGX has never gone up like it has done now. Shareholders have made a lot of money. The government is also bringing so many reforms that are helping the market.
For us to be able to realize the full benefits of the reforms, they have to go full circle.
One of the success stories of this summit of today, people have learned, people have here where we are coming from, where we are heading to. We have to do it collectively, we have to do it competitively.
The summit reaffirmed the critical role of sound policies and corporate excellence in shaping a resilient and competitive economy for the future. Rhoda Onuzulike.
Thousands poured into U.S. Atlanta's Mercedes-Benz Stadium Monday to see Spain face Cape Verde in what turned out to be a remarkable scoreless draw. Some fans stood outside increasingly stressed over their tickets, where fans were seen going back and forth for hours between representatives on the phone and FIFA representatives in the ticket booths as each blamed the other. The World Cup has delivered thrills on the pitch, but fans have flooded social media with complaints about tickets that never arrived, orders that were cancelled at the last minute, and hours that they spent trying to sort out problems between FIFA's ticketing system and outside resale platforms. The vast majority seem to be about industry tight and startup, but people who bought through competitors such as Seatgate and Vivid Seat have also reported issues. Well, that's the issue some fans are facing at the ongoing World Cup with their tickets, which they bought from resale. Hopefully, their issues are sorted out so that they could enjoy the thrills of the World Cup as it is ongoing. And of course, the impact of that on their businesses, especially those who are reselling those tickets. Well, that's Global Business Today. We'll keep bringing you more updates from the World Cup as it unfolds. And of course, we'll wish all the teams the very best as they play the matches. Well, that's it. So many thanks for watching. I am Yemisi Lanre Ido.